Our top story right now is that sharp sell-off in stocks. Futures are higher this morning as the technology sector tries to recover from a sharp decline yesterday. It pulled the markets lower, knocking off more than 600 points from the Dow Jones Industrial Average. Yesterday, it was a sharp sell-off, and Apple really drove a technology slump. Now, this morning, it is unchanged after taking a hit amid fresh concerns over the demand for the iPhone. Joining us right now is Scott Martin. He is Kingsview Asset Management CIO. Scott, good to see you this morning. I know you've had your share of worries out there from markets. Is yesterday's performance telling us anything about what's ahead?
Probably. You know, you're right, Maria. Without the markets, I've got enough to worry about. So thank you, markets, for making that even more compounded. Listen, I love what you guys talked about there in the intro to the hour. Lindsay's absolutely right. You know, the revenue numbers estimates have come down. The earnings estimates have come down. Mitch is right, too. You know, guys, I started some meditation over the last couple weeks, so you should definitely try that at home, kids. I think that has helped me with some of the worries, Maria. And the market needs to stop freaking out. You know, that's the thing. Like, kind of like they say in the meditation, like, be calm. Because even though earnings, like you said, Maria, and you pointed out astutely, are not growing at 20+%, guess what, kids? That was unsustainable. I mean, those weren't numbers that we're going to keep repeating, but the market maybe got fooled into thinking that, or let's just say we got valuation metrics that seemed to be aligned with the thinking that that was going to continue. So as we alight, or let's say descend, back to reasonable numbers and reasonable economic growth expectations, Lindsay mentioned interest rates going up and so forth, the market needs to settle into some price here, and then I think it can rebuild some of these losses.
Scott, is there, if you want to be defensive or if you want to stay in the market but not have to meditate and do yoga to stay calm, where's the place to be right now?
Yeah, and I haven't found any good yoga or meditation stocks yet, Mitch, but I'm still looking for them. You know, there are places to be, and that's a great thing to point out. You know, this is not a total freak-out sell-off. Even kind of like we saw in February just yet, or even like we saw over Brexit, or even like we saw, you know, back in the late 2000s, you know, 2008 and so, because there are things that are working specifically, and we haven't bought enough of this stuff yet, but we're accruing it. Look at consumer staples. Look at real estate. Look at utilities. You know, as interest rates come down, because people, let's say with the freak out, you know, they freak out and they buy bonds, they buy fixed income instruments, and that drives down interest rates. Some of these interest rate sensitive names tend to hang in there when equity markets go like they did yesterday. So, Mitch, I would say those are three good sectors for the individual investor at home to look at that we've started to pick up as well that have started to mitigate some of the volatility.
Hey, Scotty, so you mentioned a lot of defensive sectors there, which, as you rightly point out, they've been doing well more recently. But what hasn't been doing well is tech, and that is what led the market over the past 2 years. Right now, you have 3/4 of the S&P 500 tech sector in bear market territory. Do we need the tech sector, though, to continue to move this bull market higher?
We need something to, Lindsay, and I'll tell you that's the interesting point is you had these great leadership names, you know, your favorite ones and ones we still own, you know, Google, Apple, Microsoft, Amazon, Netflix, whatever. Broadcom, Adobe, great companies that were just crushing earnings and getting really high valuations, again, like we talked about, that were probably undeserved. And now, Lindsay, the market has no leadership. You know, everybody's been calling, and the so-called experts have said, oh, my God, this is the time for financials because the Fed's hiking interest rates, when in reality, for the most part, they were just flattening the interest rate curve. And so, to me, it needs leadership. I don't know if it's tech necessarily. I was hoping for a while there it was going to be industrials because we were hopefully going to get some of these trade deals reworked and more in our favor, and that was going to work out for some of the companies like Deere, Caterpillar, and some of the other ones we own. But maybe it's healthcare, as maybe that gets worked out with, you know, maybe a bipartisan Congress. Who knows? But I think you're right, Lindsay. It doesn't necessarily have to be tech, but it has to be some leadership in some other sector to take the reins of this market.
Well, what about financials? I mean, that's probably tough because you've got higher rates going on. Tech is where the growth has been.
Yeah, higher rates are interesting, Maria, because even though the Fed's been hiking interest rates, rates did get a nice boost, as we saw, you know, into October, and then they've kind of fallen off a bit. I mean, look at, you know, last week we were at 3.25 again on the 10-year. And now I think I checked this morning, we're at 3.15. So, you know, financials kind of remind me of all the girls that turned me down in high school. I had to bring that up because they're never there. You know, like financials, every year we hear somebody make this bold call on financials being there and being the one.
Yeah.
And they're never doing it. So to me, I'm not ready to give up on financials, but as far as overweighting financials, I wouldn't do that either.
Now, what about Amazon? This split decision expected to divide its second headquarters evenly between New York City and Northern Virginia. According to the Journal this morning, the announcement could come as early as today. Is this a smart decision? What are your thoughts here? And would you put new money to work in this market right here?
Yeah, we would. I would slowly start weighting it again. I don't think that, you know, you have to jump in on a day like today where, you know, we had a little bit of mixed trading overseas, especially in the Nikkei, for example, as you've pointed out all morning. And we've got a little bit of a bounce today. But, I mean, gosh, even Eli Manning had a decent football game last night. So the market can bounce just like that as well. But I think, Maria, there's some levels that are coming into play here that are decent as far as some of these tech names that have sold off 20, 25%. So I think you can start waiting in here with some money, but just have a quick kind of hook on it if things start to get worse again, because you may get some lower prices. All
right, we will leave it there. Scott, it was a pleasure. Thanks so much for weighing in here.
See you guys.
Scott Martin joining us there. Turning to